Hey everyone, NIO, the Chinese electric vehicle company, reported quarterly financial results this morning that sent the stock price down more than 7%. I'll review those financial figures, I'll explain what caused the stock price to fall, and I'll update my buy recommendation for NIO stock. Coming into the quarter, and in fact for several years now, I've told investors to avoid NIO stock. I've been reiterating this recommendation for several years as the company continues to lose massive sums of money on the bottom line while investing in growth. So after this quarter, am I changing that? Am I upgrading NIO stock? You'll want to stay tuned to find out. So let's take a look at the numbers.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Alright, so in its latest quarter, NIO said it delivered 30,053 vehicles. That was down from 31,041 vehicles in the same quarter the prior year. NIO has fluctuated between rapid growth and decreases as the company continuously launches new models and invests in upgrading new brands. I'll share those with you a little bit later in the video. So vehicle sales for the first quarter came in at 1.16 billion US dollars, and that was a decrease of 9.1% from the same quarter the prior year. The vehicle margin, and here's where you want to pay attention because this is what caused the stock price to fall, in my opinion, is the vehicle margin. It came in at just 9.2% in Q1 2024 compared to 5.1% in Q1 2023. So it was a nice increase from the prior year, but it was down from 11.9% in Q4, so from the previous quarter. Investors were hoping that NIO had made upgrades and that those upgrades and those efficiencies would lead to double-digit vehicle margins continuing and improving. Management had told investors that NIO could increase their vehicle margin up to the mid-double digits, close to 20%, maybe 15% on the lower end. So this 9.2% number was disappointing. Now, in the conference call, management did note that they are still targeting those mid-double digits in vehicle margin, but for now, this is the level and it's continuing to be pressured. Now, in the latest quarter, not only were the delivery numbers below the levels of the same quarter last year, but NIO has also invested in increasing its sales capability, meaning more salespeople, more promotional activity, and all of that is weighing down as well. On top of that, vehicle pricing was lower because of the mix of the cars that were sold. NIO sold more of its lower average selling price models, and those models are not as high a margin as some of its other models. So all of which combine to have NIO's profit margin falling, the vehicle margin falling from the previous quarter, and deliveries decreasing as well. Of course, competition is fierce in this industry. I've been talking about this for over a year now. The constant launch of new models, the price cutting has been fierce, absolutely devastating, especially in China. And that's causing lowering prices, that's causing lowering profit margins industry-wide. It's not just NIO that's experiencing these difficulties. You're seeing these challenges from all of the participants industry-wide. Thankfully, the EV market in China is much better than the EV market in the US. In the US, now that internal combustion engine vehicles are in greater supply, the supply chain shortages have pretty much been removed. People are choosing those internal combustion engine vehicles more than 9 out of 10. Whereas in China, electric vehicles are gaining greater market share. So at least the industry is growing and growing rapidly in China. So that's been a nice tailwind, even though competition has been a huge headwind for these participants. So NIO's loss from operations came in at 747 million in US dollars. and that's based on vehicle sales of 1.16 billion in US dollars. So a wide margin of loss on the bottom line for NIO, and it continues to invest in newer models. It recently launched the newer brand, and it's even investing in a third brand that's coming out next year, perhaps the year after that. So NIO continues to invest despite these losses on the bottom line. The company is still very much focused on growth and not very much concerned about the losses on the bottom line. So even though in the first quarter sales were down year over year, vehicle deliveries were down year over year, the company gave us an update on how sales have surpassed in April and May. And in April and May, which are not included in its first quarter, these are included in its second quarter, which the company will report on later. They've said that sales are robust. 15,600 vehicles delivered in April, and then 20,000 delivered in May. So the growth rate is going to be much, much better for the second quarter. It's actually going to be up over 100% if the next month, June, goes as the company expects and there isn't a big drop off in sales. So the second quarter, as these new models have launched, the second quarter has been really, really strong for NIO. Now, on May 15th, the company launched the Envo brand and the first model, the L60. And the L60 is a family-owned, a family-oriented SUV. And that smart electric midsize SUV is now accepting pre-orders in China, with deliveries scheduled to start around September. So that's going to broaden its market opportunity because it's going to be a lower priced model. And the lower priced model, of course, has more potential buyers because more people can afford a lower price. So that's something that NIO stock investors have to look forward to. So I highlighted already that in April and May, that represented growth of 134% and 233% compared to the previous year. And part of the reason is in April, they launched the 2024 ET7 executive sedan. So in regards to the vehicle margin, management said that the decrease in vehicle margin for the fourth quarter was mainly due to lower average selling price as a result of increased promotion during product transitioning. And this increased promotion is necessitated by the increasing competition in the industry. Everyone else is lowering price and competing fiercely against each other. And so to compete, NIO is lowering its price as well. So it's a combination of factors that's leading to lower margins industry-wide, and this has been bad news for investors. And that's why I've been telling investors not to buy NIO stock. I've been saying that for several years now, not to buy. And if you listen to that recommendation, you will have saved a lot of money on NIO stock. I know NIO stock is down huge, down from its highs, and investors are very hopeful. I understand it's a popular stock. I understand a lot of people have lost a lot of money on this stock, and I'm really hoping that things turn around for NIO. But unfortunately, the company is just losing too much money on the bottom line and not making improvements quickly enough in terms of profitability to make it an attractive investment. Sure, it's growing very nicely. It has very great growth prospects, but when will it achieve profitability? I don't know. Will it ever achieve profitability? I don't know. I haven't seen enough evidence to demonstrate that this strategy will lead to profitability and profit margins sufficient to compensate investors for the risk that they are taking. So I will update my rating of hold on NIO stock. I wouldn't advise buying this stock until the company proves more progress towards profitability. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.